All right, what's going on, guys? This is going to be the trade recap for April the 6th. Today is the day after Easter. So, for everybody who had Easter yesterday, happy Easter. Hope you guys enjoyed that. So, unfortunately, on this trade, we did lose this trade today. And this is actually the first trade at the beginning of quarter two. Like I said, quarter two, I plan to be a lot more volatile with my movements. I plan to be a lot more in depth with my movements. And in quarter two, I want to make as much movements as possible during my trades and get the most trade recaps out of this quarter. As you can see, let me shift this way. Calendar back there, guys. Peep the new calendar. That's gonna be our quarter two calendar. That's gonna be the calendar that we use each day, and we're gonna log our trades. So this trade today was an $8 loss. It was nothing too bad. It was nothing too crazy, but I'll go you guys through my thought process and what I thought was gonna happen. So first thing that I want to do is I wanted to mark out my liquidity sweeps that I could potentially aim for, my take profits. So today's bearish was bullish bearish. We have liquidity sweep right here. We have liquidity sweep right here. And we have liquidity line up here. I wasn't too found on it coming all the way up to 662. We had our assumptions, but unfortunately not due to high volatility coming out of Forex Factory. What I mean by that is Forex Factory. We had our 9 a.m. red candle. Not red candle, red folder. PMI, and I want to show you how that represents the charts right here. So obviously we know that this is 9 a.m. Our time, so that would be 10 a.m. New York Standard Time, right? So let's find our 10 o'clock on the candle. You see market opens. All right, we're moving 5 minute. We come up here, boom, 10 o'clock. You see this high volatility range? That is a, sorry, I don't know why that happened. Let's see if I can accurately mark out this candle. That is a 337 tick candle, which is absolutely nuts, right? So knowing that, we're assuming that, all right, now we're going to be in volatility. But fortunately for me, this was almost confirmation that we're going to continue our bullish structure, only because we had nothing lying here besides a 15-minute fair value gap. We have a 15-minute fair value gap right there, right? And actually, coming out of that, I want to scroll down to the 1 hour time frame where I can show you these 1 hour lows. When this candle closed and this candle closed, what do? We have relative 1 hour equal lows, and we had 5 hour equal lows. So to me, equal lows, equal highs, we know those are strong draws on liquidity because we didn't break structure to that side. So what ended up happening? We come in, we have this high volatility range, but if we mark out from this low up to this high, what do we have? We have equilibrium right here. We have an equilibrium filament, and then we have a potential SMT divergence right here. We didn't come down to here, so that means we didn't sweep out these lows. We didn't break down these lows. We're not going to move further down. So what do we have? We start having retracements up. Retracements up caused us to have this 5 minute fair value gap right here. Then we have the 5 minute fair value gap that gets filled. So we're going to scroll down to our 1 minute time frame. Or sorry, 5 minute fair value gap that got inversed. I stand corrected. 5 minute fair value gap that got inversed. Right, so we see the inversion of the fair value gap. And all right, now we're waiting for good entries. So, wrong one, my bad. Let's get our GAN box in. If we draw it up to this 1 minute high, 1 minute low to that 1 minute high, we even have 1 minute equilibrium filament. And actually, what I was watching on here was a fair value gap that got filled right there. So this is what I want to buy in my retracement on the 1 minute time frame. So you would almost assume that, all right, we have our equal lows, we have high volatility that caused the equilibrium filament, we have high volatility that caused the 15-minute fair value gap filament. Because if we look at 15-minute time frame, 15-minute filled this fair value gap, and we didn't inverse it, so we didn't move down. So that's confirmation that we're going to move higher. And you know, so we enter in our position right here. And originally my targets was set around right here, 660, but then seeing this big volatility move up right here, and that is a very dramatic 5 minute high, you know, you're safe to assume that, all right, we had to bring down our take profits right there. So now we have a negative R to R. We have a 2.23 and then a 1.43. So this is not good risk to reward. This is better risk to reward, but I'm just saying, like, when we have a dramatic 5 minute high off high volatility news, that is a very good position for us to reverse and change price in the opposite direction. So we start moving up, and you know, I'm chilling, I'm going good, but then boom, we just shit the bed. We come down, we Drake candle, we're done for, right? And to me, you have to think like, a market mover. You have to think like someone who makes a market move. Why would price want to come down, fill this low? Just why would price want to come down, fill that low, just to move 300 ticks higher? That's, to me, that's not sensible as someone who would think like a market mover, and me wanting to trade, because market's all manipulation, and we know that market's all manipulation. So I don't believe price would want to come down and come back up 300 ticks. I would rather believe that when price has the opportunity to come up 145 ticks, if price has the opportunity to even come up, I would say 70 ticks, you know, like that to me is way more guaranteed than if price comes down with a deep retracement for a 300 tick move out of it. So after we saw that, and one thing that I did see was, I can show it on my trend line here, relative 5-minute equal highs right here. So to me, this was a point of reversal. This was a point of change in trend. We did get a inverse fair value gap down here from that high, from that low to that high, from that wick to that wick. We had the inversion of the gap. So it's almost safe to assume that, all right, we're gonna move price lower. Price is gonna move down in the opposite direction. So when I bought out, I essentially bought out at the bottom of this candle. It was an $8 loss. But one thing that I also do want to notice that's really important to my strategy and the way that I trade is that if we look at these candles, they're really small bodies with really big wicks, right? And we're on 5-minute time frame. So let's just count how long we've been in this trade. If we were in this trade till now, we can count how long we've been in there, right? 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. That's 1 hour. 5, 10, 15, 20, 25, 30, 35. An hour and 35 minutes. To me, if I don't make my trade within the first 30 minutes to the first hour, if these candles were up here, if I don't make my trade by then I'm done with my trade. Because to me personally, I don't want to sit in my trade for more than 2 hours with almost assumptions that's going in the opposite price range. What we want to do as traders is we want to get in and we want to get out as fast as possible and execute as effectively as possible. So that's the trade that I took today. One thing that I do want you guys to take away from this is that when it comes to market conditions like this, we can almost see that high volatility will form pricing going that direction. But at the same time, I fully believed in my mind that we were going to go bullish today. But actually, one thing that I do want to let out is by the time this video comes out, Trump is going to speak at 12 o'clock my time, which is Texas time. And so that's going to be 1 p.m. New York Standard Time. So because of that, we could see price run in opposite directions. After coming out of all war news, we could very much see high volatility down to 654, 652. We could see drastic multi-hundred tick moves coming out of this. So we'll see where the trade goes from there. Obviously today, on the start of the month, on the start of Q2, we're down $8, but all in all, it really doesn't matter. It's just a win or loss game. We'll be back tomorrow, and I can't wait to see you guys in the next video. Peace. Have a good one. Stay blessed.